Chapter 1, Introduction to Accounting and Business. In this chapter, we'll talk about some introductory elements to accounting, in particular how it works within the business environment, rules and regulations associated with accounting, the basic accounting equation, and we'll talk a little bit about the financial statements. Everything we cover in this particular presentation will be covered in much more detail as you work through the chapter in the textbook. I would recommend that as I display a new slide on the screen, you might hit the pause button and read the slide before you listen to the narration. Accounting is an information system. As a matter of fact, it's considered the language of business. All persons involved in the business function need accounting information, from the owner of the business to the managers to the investors, stockholders, creditors. All are interested in the information that accounting can provide. Financial accounting, the subject of BTE 101, deals with the preparation and understanding and analysis of financial statements. Financial statements are reports that are really required by all areas of business. To ensure that the accounting reports, primarily the financial statements, are prepared objectively and can be relied upon, the accounting profession as well as the government have adopted a number of accounting principles and standards, usually referred to as generally accepted accounting principles, GAAP. Within the United States, as you can see, the Financial Accounting Standards Board has the responsibility for developing these principles. A Securities and Exchange Commission makes sure that these principles are followed. And there's also the International Accounting Standards Board, responsible for providing rules and regulations outside of the United States. As we work our way through the first couple chapters, you'll understand that the accounting equation is the foundation of accounting. We will learn about the major components, the assets, liabilities, stockholders' equity, and how it all relates to recording business transactions. But for now, the basic equation is assets must equal liabilities plus stockholders' equity. Business transactions have to be recorded. What is a business transaction? Economic event, basically something that involves money. If it involves money in the business, it has to be written down or recorded. In the accounting world, we call this journalizing a transaction. The end result of recording these journal transactions is preparation of the financial statements. The income statement is the first statement that we prepare after our transactions have been recorded and posted to the books, so to speak. The income statement is nothing more than the reporting of revenues and expenses over a period of time. Excess of revenues over expenses is net income. Excess of expenses over revenue would be a net loss. The next financial statement, the balance sheet, simply summarizes our accounting equation. It lists all the assets, liabilities, and stockholders' equity and proves that the accounting equation is in balance. We'll spend a great deal of time on working with this particular report. The final statement that we look at in this chapter is called the statement of cash flows. This is simply a summary which tells us where the money comes from and where the money goes to. Cash flows are critical to the success or failure of a business, and this particular statement is very important to not only be able to prepare, but understand and analyze.